luck, yes, sometimes has a factor, but they put themselves in a position to be lucky. So that means all of the stuff behind the scenes that we don't see, right? And all the work they put in there puts them in a position to have these opportunities. So I'm a big believer in that.
Welcome. This is the Hot Real Estate Investing Podcast, a podcast dedicated to helping others through real estate investing. Our hosts interview guests from all aspects of real estate investing who generously share valuable experiences and advice. Whether you're starting out or an experienced investor, this is the show for you.
Hello and how's it going? My name is Travis Shelton and welcome to the Hot Real Estate Investing Podcast, where I interview guests who want to help others investing in real estate. We keep these fun and full of value, and really looking forward to the conversation today with our guest who's invested as a limited partner or LP in over 1,100 units and is a current co-GP of 128 unit property in Dallas, Texas. It's my pleasure to introduce the founder of Optimal Equity Group, Jarod Alexander. Jarod, thanks for joining me today, man.
Hey, Travis, thanks for having me. Glad to be here.
Absolutely. Well, I want to give you full credit for your own introduction, so you can give our audience a little bit more about yourself and your real estate focus.
Yeah, absolutely. I'm currently living here in Phoenix, Arizona. I've been living here for the past 10 years, originally from North Carolina. And, I'm married, have two kids. I got an 18-month-old little girl and a 4.5-year-old boy. And, they're a big why of why I'm, in real estate and doing what I'm doing. I just want to create more time, freedom to, just to be more available and spend moments with the things that mean the most. So I started, as far as real estate goes, out buying single family. I come from a real estate. My parents grew up owning real estate, or my grandpa, my mom, and so kind of was introduced at a young age. And then after reading the Rich Dad Poor Dad book, ended up getting involved in single family a few years ago, and then quickly transitioned to multifamily. And now, like you said, I'm the owner of Optimal Equity Group, so decided to get more active in this space and just help educate others on different ways to diversify their portfolios and just create opportunity that not a lot of people hear about. So I'm the type of a guy, once I find something that works, I want to shout it from the rooftops. So
I love it. That's awesome.
Yeah.
Well, we always start our podcast with some motivation, Jarod. So what's the motivational quote you'd like to share today?
This one was from Zig Ziglar. I was thinking all the quotes I wanted to talk about, but this one really hit me, was influential when I got started, and is you don't have to be great to start, but you have to start to be great. And, that was huge because I always, I come from a sales professional background, and I've got, I'm pretty good at what I do, in my W-2. And so I wanted to start there when I started in real estate, and it just wasn't possible. I had to just, start learning, educating myself, and just really jump in to get going and learn the knowledge I needed to learn to get to the next step. So
I love this quote. I love a lot of Zig Ziglar quotes, but this one specifically because so many people do so much analysis. They're always overthinking, and I always tell people, you just have to take action. You got to do something, right? And it's that action that you'll learn the most from. It's buying the property that you're going to learn the most from. You can do all the analysis in the world, but until you actually get your, hands dirty a little bit in an investment, that's where the growth and the education really comes. So thanks for sharing that motivational quote with us.
Yeah.
So transitioning into our main topic, how can you help our audience of real estate investors? What about it specifically about apartment syndications, made you kind of go all in on multifamily? Maybe we can start there.
Yeah. And great question, and if I could, I'll just take a quick step back, into that single family. Because that was my goal at first. I wanted to create passive income. We were talking about before, just that horizontal income, to really replace my W-2. and the amount I was getting from my W-2. And so when I bought that single family, I had a certain amount I wanted to cash flow per property, and that was the goal. And so I put on my first one, I did $25,000 down on this property. It was out of state. Being here in Phoenix, Arizona, I wasn't finding many that pencil. Yeah. Not saying they weren't out there, but they were hard to find. And so
still difficult. Yeah.
Yeah. Right. And so we went out of state to Kansas City, Missouri. Bought this $75,000 house, 1920s build. I mean, tenant turnkey, right? Tenant in place, property management company, handling the day to day. And it was going well. But after about 4 weeks, the sump pump, I quickly learned about sump pumps, how much they cost. And after the cost of that, landscaping, regrading, and some other repairs, I was about $4,000 in on a property that's cash flowing $200 a month. Right. And now when you factor in your CapEx, your expenses, everything there. And so I expect these bigger repairs, but I wiped my cash flow out for 2 years.
Yeah.
Right. And if I'm trying to create horizontal income, that was a big eye opener to me. And now fast forward, I won't go into too many details there, but we did end up selling a property about a year later, ended up making some money on it. So all in all, it was, a profitable deal.
Okay.
But that opened my eyes to, man, I got to do this 50 or 60 more times to be able to, create the amount of income I want to create. And so I quickly learned about apartment syndication. So I started going to some local meetups. We were talking about on the call, I never even heard of apartment syndications until a few years ago, right? I had no idea what it meant. And
so you found out about them based on the meetups? Like you were going to meetups and someone just said syndications and you're like, oh, what's that? Is that kind of
so actually I had a good friend of mine that was in real estate that I was kind of, he was my mentor, so to speak. Okay. And I was just kind of following what he was doing. Hey, Jared, you want to go to this meetup? I'm sure, and so I went there and there was this guy, Zach from Rise 48, as we know. He was actually speaking, about his business and what he does. And of course, talking about apartment syndications. And now he's like the second largest syndicator, I think, in Phoenix. So he's doing really well for himself, which I actually invested with. He was as an LP. So, but I started learning that, hey, I could take that $25,000 that I put up for that down payment and put that into a syndication. And I can make essentially similar, a little less cash flow, depending on the deal and and the projections there, but essentially averaging it out, pretty similar cash flow to what I had on that single family, and could be completely hands off, right? Yeah. Because that turnkey, even though I had a property manager, I still got a call in the middle of the night, so I had to manage that, so I had to manage the repairs. There's still work involved there. And so I could be in a syndication completely hands off and be able to still get the distributions monthly or quarterly, depending on how the deal is structured. And then I still get all the tax benefits and I get to focus on, what's going to produce me the best results. So that was
I always think it's like people that want to invest in real estate, I always tell them it's not passive. Like if you own a long-term rental, it's still not passive. You own a turnkey, it's still not passive. Like even if you have a property manager, they're going to have questions and things to ask you. Like there's some work that has to be involved, but in a syndication, it's like as a limited partner, you're basically signing documents and collecting checks. Like there's not a whole lot of other work involved with it. So I tell people, if you really want to be passive, that's the mailbox money people truly talk about. But in anything else in real estate investing, like you're going to have to do something, right? Like you can level it out if you do your own property management, if you contact your own Airbnb guests, whatever it might be. But like syndications as an LP is the only true like passive that I've found really in real estate investing. But I mean, have you found any other things that are truly passive like that in real estate investing, I guess?
Not really. Not outside of a syndication, right?
Yeah.
Now, of course, the syndication, it could be outside of real estate. They got,
all kinds of stuff.
All other things, but it's primarily real estate now. There's nothing that's truly passive.
So were you an accredited investor when you started investing in syndications?
I was not. No.
Okay.
Yeah. And
So how did you get into maybe your first, and are you an accredited investor now? Maybe let me ask that first.
So no, I am
Okay.
still currently at the end of this year I should hit that threshold.
Okay.
But yes, currently not. And I'm glad you asked that question, because a lot of people think they have to have the $1 million net worth,
Exactly.
or make 200,000 plus, for the past 2 years, and their personal income or 300 joint. And that's not true. You don't have to get involved in these deals. First of all, they're structured as a 506B.
Yep.
So that is open up to non-accredited investors. And, a lot of these ones that do, especially nowadays, the minimum is lowered a little bit. So 25,000, you can get involved in some of these deals.
Yeah.
And that's how I got involved in my first one. I actually did the first one through an IRA.
Okay.
Which, I took my self-directed IRA, and you just use a third-party custodian to kind of handle all the transactions. And I still get a distribution from that custodian every month into my IRA for that deal. But yeah, you don't have to be accredited to get involved in these deals.
So you kind of you randomly kind of stumbled into, I feel like, apartment syndications by going to these real estate meetups in Phoenix. You met Zach from Rise 48, who's been a guest on this, obviously, and speaking at the Breakthrough Real Estate Investors Conference. And I've invested both as a 506B and a 506C with Rise 48 and Zach's group. So totally know what you're talking about there. But like, how does someone that doesn't know about how did you vet like Zach and his team? Because when you met them, they didn't have $1 billion of assets under management, right? They were probably a new startup. Like, how did you choose that group or co-GP group as opposed to maybe other groups? Do you diversify, or do you kind of do all your investing with one group? Help me there.
Yeah, so I'll kind of go back as far as the due diligence on the operator.
Mm-hmm.
And that, again, a great question, because that's honestly one of the most important pieces of it. I always say invest in someone you know, like, and trust.
Mm-hmm.
So the first one was, that mentor of mine, he invested with Zach. And so that was a good start for me, because I know him, and I know he does his due diligence. But of course, I still hopped on a call with Zach, and being brand new, I went online and literally, what do you ask a syndicator or operator, right?
Yeah.
What questions? And I'm literally on the phone with him. I remember I was just getting off work, and had my little list, and I was going through all the checklist items. And of course, Zach, he covered most of them before I even had to ask. But I
of course
was kind of checking them off just to make sure. And some of those questions were, have you ever had a deal go full cycle? Mm-hmm. Okay, and what were the returns there? Have you had the same investors reinvest in your deals? Because I think that's important, as well. Do you invest capital in your own deals? Tell me about a deal that didn't go as planned, right? And how did y'all adjust? And so those were some of the things, and you kind of, and Zach, I mean, he's transparent with everything, but if an operator is reluctant to give you any of that, I would be reluctant to give them my money, because I don't expect everything to go great. I just want to know when things do go wrong, what plan do you have in place to address the issue or problem or whatever it is. So yeah, those are a few questions that come to mind regarding that.
Yeah, no, those are great. And I hate to do plugs, but I am going to plug right now on my hotrei.com. I do have a due diligence checklist for passive investors. And it's like a 50 question, basically due diligence checklist of questions you should ask or research before investing as a limited partner into an apartment syndication or any kind of syndication deal. So I do want to throw that plug out there, just because I think what you experience is what we've all experienced. We didn't know what to ask these people, right? Like, I kind of asked the same questions, word of mouth, no like and trust. They seem like, but when people are getting going, you really don't have that great of a track record, or maybe only have, one deal that's gone full cycle. So it is difficult to kind of put so much of your money into one of these deals without truly vetting them, exhaustively, and so those are great questions that you asked.
Yeah. Well, yeah. And another one is, like me, I'm not an underwriter, right? That's not my niche. I can do basics and I kind of know some things to look for. But if you're just getting started out, and you don't understand, I mean, ask those questions with the operator, have them walk you through that. There's actually even third party companies or people that will actually underwrite deals and tell you, hey, this looks like a good deal, or here's some things you want to check out, maybe dive a little deeper into. So
that's great advice.
It's always another resource that
I always have someone else look at, I always underwrite it myself, but then I'll always go to someone I also trust or someone else that invests and say, hey, this is what I'm looking at. What are you seeing here from this sort of deal? So I do always like that kind of like curbside consult, I call it, like from the healthcare setting, but I'll just kind of like, hey man, what am I missing something here? This deal looks good, but I just want to make sure you don't see any red flags, I think is good. So kind of transitioning from, hey, I invested in my first deal to now I have 1,100 units as an LP. Like how quickly did that scale? And are you working with multiple GP groups or kind of focused on one or two GP groups, or how are you diversifying your LP deals?
Yeah, so I'm involved in two groups. So I did a handful of deals with Rise.
Okay.
And another deal I did with an operator that buys out in Houston.
Okay.
And so those are the two I'm involved in. And I will share, once I get excited about something and I do find somebody I know, like, and trust. I like Rise. I like what they were doing.
Mm-hmm.
And, and I'm, I've diversified in certain areas of the market here in Arizona, but, and certain deals and stuff. So yeah, that's kind of what I did at first. I will share though, as far as, and we'll kind of get to this, what's some mistakes or learning,
sure.
Learning opportunities I wish I would have done differently. And that was diversify a little bit more.
Okay.
I did a handful of deals and I'm happy with those deals. I wouldn't necessarily take it back, but looking back, I probably would have done that a little differently. So
to diversify in a couple other GPs or potentially other markets. Like how would you have liked to diversify markets? Okay.
Yeah.
So you're really only in Phoenix and Houston then? Like all your 1,100 units are in those two. I mean, good markets. You can't be upset about the markets you're in, And that's why I agree. Yeah. I mean, I struggle with that too. It's like I invest in Phoenix primarily, right? And it's like I love the market. It's a great real estate market. But that's one of the reasons why I love syndications is because you can so greatly diversify your assets or even funds, right? Because you're being able to invest in one deal and being part of thousands of doors in a fund. But same thing with syndications. I tend to think, diversifying a little bit between GPs just to see, how do they vary? How do they communicate differently? And then different markets. It allows you to still invest in what you love, multifamily syndications, but with a little added safety net of the diversification. But thanks for sharing that. That's awesome. 1,100 units, two big markets. Let me ask you this, because everyone's always like blown away by the answers people give. Do you ever see any of your limited partner assets? Like, do you ever go out to Phoenix, or do you ever go drive around Phoenix and see your apartments, or go to Houston to see any of your assets?
So I haven't been to the one in Houston yet, but yes, so I'm here locally in Phoenix, and I've driven by them. And it's interesting too, because sometimes I forget exactly where they're located on some of them, and I'm driving by one day and I'm like, oh, hey, I'm a limited partner in that deal. Like I own some equity there, and so which is cool, so I do drive by them. And I purposefully, I will drive by some that are more closer to where I live just to see, okay, hey, again, I trust Zach and what they're doing, but it's good to verify. Trust but verify. It's good to see that report of, hey, we did this, and good to go by or drive by the property and it says, okay, look, they did do that. Things are coming along. So
I do the same thing. I like to be able to drive by my assets right now, and I love that people can diversify in different markets. But I also love to be able to go drive and go look at that apartment complex that I'm limited partner in too. So maybe when you were getting that transition from single family to multifamily. What were some of the reactions for people like saying you wanted to invest in multifamily syndications? Was it like people were like, what is that? Or were they like, hey, that's a scam? Like, did you get any negative feedback or any kind of unique reactions when you started telling people about apartment syndications for the first time?
I did. The first one was probably from my wife.
Yeah.
I finally got her sold on the single family. You know, we buy this $75,000 property, and then we start looking at some bigger, fourplexes and stuff, and then all of a sudden it's multi-million-dollar apartment complexes. She's like, "What?
You're scaling quick."
Yeah, absolutely. So that was the first one. But yeah, I had some family members that were very skeptical, and really, they had bad experiences, not necessarily apartment syndications, but in investing in a group that it didn't go well.
Yeah.
And so they always related that experience to this. And, my objection to that was, this is real estate. This is, look at the track record. Real estate has always performed well over time, always increased in value. And this is a brick and mortar asset, unlike the stock market, and I still have some money in the stock market, but it's, one tweet can dip a stock and, it can just disappear. Right. And so in real estate, it's a brick and mortar asset. I can drive by it like we were talking about. I can see it, it's tangible. And
people need a place to live.
The mitigate, risk mitigation. If like in a single family, if one person's not paying that rent, you're getting 100% of zero, right? Mm-hmm. For the months they're not paying. If in an apartment unit, I'm at 128 out in Houston, or no, this one's in Dallas. And if 8 people aren't paying the rent, you still got 100 people or 120 that are, right? Yep. Like it's, very, I believe the risk is very mitigated, as long as it's, got a well property management, the companies, which I like with Rise and actually this other group is everything's integrated, right? So they have a lot more control over that asset and how it's ran on a day to day. And yeah, so looking at all that, that was kind of my objection to it. But even still, I mean, people hear of apartment syndications, which is syndication is pulling resources together from investors. And whenever they hear that, they think of the pyramid scheme or it's a scam or you're right. So it's definitely.
When I tell people about the returns, I literally get told that I'm lying. I'm like, okay, like I don't know what else to do. I mean, I'm not someone that goes and flaunts checks or my bank accounts and things like that. But I just tell people that this is a SEC regulated business, right? That I'm investing in or others are investing in. It's like the highest level of scrutiny out there. If you are getting a SEC compliant, syndication, as opposed to maybe just someone pulling together money and not going through the SEC. Because I've been fed deals like that too. Hey, we're not going through the SEC. Yeah, thanks. I'll see you later. Like I'm not at that point where I'm taking those sorts of, angel investments, maybe we'll call it, or shadier investments. But I think like for the common investor out there, or someone that hasn't invested in syndications, these are typically so regulated that you have to know your risks. And that's why a lot of times, for the 506Cs, you do have to be accredited. But for the 506Bs, being a sophisticated investor or, having a prior relationship with these other investors give you access to these sorts of deals. So like what advice, Jarod, would you give a listener that has not started investing in real estate, but is interested in being a limited partner or getting involved in apartment syndications like yourself? Like, what would you recommend? Like going to more meetups? Is there a website or how do they gain access to this whole other world of apartment syndication deals like you got access to?
Yeah. So, I would say, definitely meetups. I mean, if you go to meetup.com, there's, especially like here in the bigger markets like Phoenix or Dallas or, wherever you might be, there's tons of different meetups. There's the local ASRIAs, or ours is called ASRIAs, but local RIAs in your network there. Podcasts are a great resource. I mean, I've learned so much. I do a lot of driving. And so I'm constantly listening to podcasts and finding, and I really think, as far as the LP side, there's definitely different books. I mean, the Hands Off Investor by Brian Burke, I think is a good one. There's another one. I can't remember the name of it right now, but it's just really understanding, what to look for, what you're investing in. And as an LP, I mean, these like you had mentioned, sophisticated investor, right? Part of, our job as being a more active role and, helping educate others is this is a 3 to 5 year investment. It's illiquid investment. So your money will be tied up for 3 to 5 years, or depending on when the deal sells, could even be longer. Right. But, I want to make sure this isn't your last $50,000 or 25 where you're not going to be able to support your household and buy food and diapers for your kids or whatever that may be. Right. So I think that's definitely important to know as well. But as far as the resources, there's tons of them out there. I mean,
yeah, I love it. So let's talk a little bit about like what's next for Jarod, right? You've done 1,100 LPs. You're in your first co-GP. Is the focus to now co-GP or GP deals moving forward? Will you still be building your LP investments like with your self-directed money? Like what's in the future for you and kind of your new business, Optimal?
Yeah, probably all of the above, right? So primarily, so I'm definitely, still building my LP investments as a passive investor, still always vetting opportunities, looking to place my own capital. But primarily my main focus right now is growing Optimal Equity Group. And so our niche is we partner with the guys that are, the experts that have the market knowledge, the property management companies, all the relationships, construction, relations. And so we partner with these guys. And kind of the nice thing with doing this is I get to cherry pick a lot of deals. Yeah. And see which ones, because obviously I want to offer my investors the best returns they can possibly get on the best deals in the best markets, right? So that's primarily what we're doing now. So more of a co-GP role on these deals, or a fund to fund, again, depending on how the deal's structured there. Okay. And what the operator does. But yeah, and then and who knows? I think maybe down the road I'll probably transition more to a GP role. But it's kind of one of those things. Going back to that quote by Zig Ziglar, right? You don't have to be great to start, but you have to start to be great. And so I think just starting and learning and evolving. There's a book called Great by Choice, and you always see these successful people and you're like, oh, they're lucky or they're this. And luck, yes, sometimes has a factor, but they put themselves in a position to be lucky. So that means all of the stuff behind the scenes that we don't see, right? And all the work they put in there puts them in a position to have these opportunities. So I'm a big believer in that is, just putting in the work behind the scenes, and they put me in a position to be part of a GP role, find the right partners, right relationships, or, just stay in a co-GP. So yeah, just steadily putting in the work. Yeah.
What is up, Hot REI Nation? My name is Jordan Nadella with Simplicity Lending Group and powered by Nexa Mortgage. As the nation's largest broker, Nexa Mortgage offers a variety of creative and competitive loan options through our 170 plus partnerships to help you achieve homeownership with the speed and service that you deserve. Whether you are a first-time homebuyer or an experienced investor, I'm dedicated to finding the right program to fit your financial goal. My mission is to make home ownership a very easy and seamless process from start to finish. If you are in the market today to purchase real estate, please contact me to find the best mortgage solution for your needs.
No, that's awesome. And yeah, I mean, I couldn't agree more. I think it's just like, you do have to get started, right? And you're going to learn from your failures, but also your successes. And so I just think it's important to get out there and get started in this. So I really appreciate you kind of sharing some of your journey, right? From single family to LP to now co-GP, and looking forward to seeing more of your success moving forward. But are you ready for the hot seat?
Let's do it.
Yeah. All right. We ask all our guests the same final 4 hot questions. So Jarod, number 1, what is one book you'd recommend to someone wanting to know more about real estate investing?
To someone wanting to know more about real estate investing, and again, I think it would probably, depend on what your niche is. So if it's LP or real estate, but I mean, I would suggest the Brian Burke, primarily for multifamily. The hands-off investor, because that'll really cover a lot of basis, whether you want an LP or a syndicator. I mean, it's good to know,
kind of both sides.
Both sides of it. Yeah. Yep.
No, great recommendation. What's your favorite productivity tip or trick, maybe a tool or time saver or app that you utilize to get more done than the average person?
So I'll tell you, this is not necessarily an app or nothing, but so I have a mindset coach, right?
Okay.
And that I work with bi-weekly. And one of the first things he had me do when we got started was set aside an hour each week and plan out your week. So, and that's your whole week, that's business, family. So every week I sit down, okay, hey, I'm a meditate, I do my morning routine, try to meditate, get centered for the day, read my books, journal, trying to do more of that. So that's first, go to the gym, get the kids off to school, be present or, focus on the business, still doing W-2. So have that focus and then family time. And so whenever I do that, I kind of just look at the calendar and say, okay, hey, this is where I need to be present. So I think that's the biggest thing to start out with. And then as a result, you can find more tools to kind of figure out, what's going to help you along the way. Yeah.
Yeah. That mindset is so important, right? It's like mindset, motivation, and methodologies kind of come last. It's like, but if you're not in the right state of mind, nothing you do is going to probably pan out the way you want it to. So thanks for sharing that.
Yeah. And real quick, Travis, if I could just share, because I think this was important. And if,
sure.
Not a lot of your listeners have, this is another book, Who Not How. Oh yeah. So I'm sure you probably heard of that.
It's literally looking at me on my bookshelf right there. Yeah.
Yeah. So, so with that being said, I hired a VA. So just, delegating other resources, to people to help create more time so you can focus on what's going to get you the most productivity and the best results. So.
No, that's a great one.
Yeah.
Jarod, what's your biggest real estate mistake or failure, and what did you learn from that experience?
And I didn't even realize this Zig Ziglar quote would tie so much into this, but I wish I would have got started earlier, right? Like you said, I was in that analysis paralysis phase for quite a bit and didn't want to make the wrong decision or any of that, which, I think you definitely want to educate yourself up to a certain point.
Absolutely.
But I wish I would have got started earlier was probably my biggest learning lesson, other than what we had talked about earlier with diversifying in some different markets. So,
yeah. That's probably the most common mistake or failure I hear asking these questions. So you're like all of us, and we all wish we would have gotten started sooner. And then finally, Jarod, if you could be remembered for one thing, what would it be?
How people would remember me, towards the end, right? I want to leave more on this, in this life than I took from, right? I want to leave a legacy for my kids and just be the best role model I could possibly be. We were actually having this conversation the other day, and it wasn't about, when people are on their deathbeds, right? They're not talking about how much money they wish they would have made, right? They're talking about how much, how present they were with their loved ones, how much they wish that they would have enjoyed the journey, lived life. And so that is my biggest thing, is I just want to leave everything on this planet I could possibly do and just be present with my kids and just be well known in that regard. So, yeah.
I love it. And I think you're well on your way, man. So just keep doing more of the same. The best place for the Hot REI community to connect with Jarod, you can find him on LinkedIn or Instagram. I'll provide his contact information in the show notes, or at optimalequitygroup.com. Again, we'll include all his contact information in our show notes. Jarod, dude, this was so much fun. Thanks for joining me today, and really excited to share this with the audience, because I think being a limited partner and having access to these sorts of syndications is vital to success in real estate investing. So thank you for sharing all your expertise today.
Awesome. Thanks, Travis, for having me.
And to the audience, thank you for tuning in today, and commit to taking action today to move your investing forward. Take care, and God bless.
Thank you for listening to the Hot Real Estate Investing Podcast. check out our website, hotrei.com, for additional content and resources. And please take a moment to subscribe and leave a review so we can continue to bring even more value to others through real estate investing.